Hi, it's AJ with North Capital Mortgage, and today I want to go over an amazing financing solution for investment properties. DSCR loans, you may have heard of them before, but today I'd like to give some detail about these loans and talk about how they work. Brief overview in this presentation, we're going to focus on how a DSCR loan works, how to qualify for a DSCR loan, who these loans are available to, some notable guidelines, and some pros and cons. So what does DSCR stand for? DSCR stands for Debt Service Coverage Ratio. This is a calculation that provides a method of qualifying a borrower for an investment property loan, which uses the cash flow of the property or rents as the primary qualifying factor in lieu of borrower income and employment. Borrower's personal credit and assets are certainly considered, but the borrower's personal income and employment is not considered at all. So that means that you don't even have to have current employment to qualify for this type of loan. So how do we calculate the DSCR ratio? The formula is pretty basic. It's simply gross monthly rents divided by the principal, interest, taxes, insurance, and any HOA, also known as the PITIA, and that's going to give us the DSCR ratio. For example, if you're bringing in $2,000 a month in gross rent, and your monthly PITIA is $1,800, you have a positive ratio or a ratio above 1. In this case, it's 1.11. So what does the DSCR ratio indicate? Any DSCR ratio above 1 is your ideal scenario. This means that the monthly rents cover the PITIA. You're going to have better qualifying parameters such as a lower down payment or a higher LTV, which is loan to value, and you're going to also acquire a lower interest rate. If your DSCR ratio is between 0.75 and 1%, this means that the rents do not quite cover the monthly PITIA, but you can still qualify, likely with a slightly higher down payment and possibly a slightly higher interest rate. If your DSCR ratio is below 0.75, this means that there's quite a gap between the amount of monthly rent that you're bringing in and what your monthly payment obligations are. So you're going to have less favorable loan parameters, but you will still be able to qualify, likely with a higher down payment or a lower LTV and a slightly higher interest rate. So for a DSCR loan, how do we determine what the rental income for the DSCR calculation will be? On a purchase transaction, your rent amount for the subject property is likely going to be determined by the appraiser's findings and will be included on the rent schedule of the appraisal, which, for example, if the appraiser does his survey and advises that he believes you're going to get $2,400 a month for that property via rent, that will be the number that the bank will use for the DSCR calculation. On a refinance transaction, the rent amount is going to be derived from any existing lease on the property, or perhaps even the rent schedule. If the appraiser advises that he believes the current market rent is higher than what the lease is bringing in, you may be able to use that higher amount as well for a more favorable DSCR ratio. Some of the loan parameters for a DSCR loan: occupancy, investment property only. That means we cannot utilize this loan for owner-occupied residences or second homes. Property type: single family detached, condominium, or 1 to 8 units. Credit score: generally 640 minimum FICO is required. Borrowers can include individuals, LLCs or U.S. entities, permanent residents, foreign nationals, or even living trusts. Transaction types: you can do purchase, rate and term refinance, or even cash out refinance. Do I need to be an experienced investor to qualify? You do not. First-time investors can qualify for this program. Even first-time home buyers can qualify. You're going to have limitations more heavily placed on first-time home buyers and limited limitations for first-time investors. Let's look at what a first-time home buyer is. So a bank is going to define a first-time home buyer as someone who has not owned a home in the past 3 years. So if you owned a home for 20 years, but in the past 3 years you have not, you're going to be considered a first-time home buyer. First-time home buyers and first-time investors are going to be required to have a 1.0 DSCR ratio or higher. possibly a slightly higher down payment, and likely some additional reserve requirements. Some notable guidelines for a DSCR loan: down payment of 15% as a minimum is generally required. Loan amounts up to roughly $3 million are available. There's no limit on how many investment properties you can own. This is notable because Fannie Mae and Freddie Mac generally are going to require a maximum of 10 loans for the borrower in order to qualify for a conventional loan. You do not have that limitation on a DSCR loan. You can have a larger number of properties and still qualify for this type of loan. Reserves, meaning how many months of additional PITIA are going to be required. It's generally going to be about 3 to 6 months. And if you do a cash out transaction, that cash out that you acquire from your equity can be used towards reserves. Interest-only payments are available for improved cash flow and long-term rental income, as well as short-term Airbnb type rental income is allowed for calculation of your DSCR ratio. Some pros versus cons for this type of loan: no personal income requirement as a pro. Again, you don't have to state what your current employment is, or you don't even have to be employed to qualify for a DSCR loan. It's going to be a faster loan process and likely an easier loan process because you're going to have limited documentation required. Portfolio expansion access: again, you can have more than 10 properties to qualify for this type of loan. And flexible ownership structures, as we mentioned. Some of the cons: you may have slightly higher interest rates as compared to conventional loans. This loan is going to be limited to investment properties, as we discussed. If your DSCR ratio is low, you're going to have a higher down payment and likely a higher interest rate. Also on DSCR loans, you will likely have a prepayment penalty. You can buy out or buy down that prepayment penalty, but your interest rate will likely go up. So this is, again, is an amazing loan for people who want to acquire investment property real estate. If you have any questions at all, please reach out anytime. info@northcapitalmortgage.com. And again, my name is AJ. Appreciate your time. Thank you so much.